Hi and welcome to the Market Alert for Wednesday, the 14th of December 2022. So an exciting afternoon for yesterday when the CPI numbers were released. The news behind it: soft CPI sparks chaos ahead of FOMC, bonds, Bitcoin and bullion bid, stocks skid. Surveying the market chaos after the soft CPI print. That word soft is going to feature today. Cool CPI sees stocks and bonds climb ahead of FOMC while dollar takes a dive, because obviously he's going to not increase rates as much as he said he was going to. Now the CPI numbers are a lot softer. US stocks gains and the dollar was hit after softer than expected CPI. And US stocks and indices have given up all of their CPI spike gains. And I don't know why they gave up all of their gains. Maybe because they wanted to get rid of a lot of the longs, take the profits, and then get out ahead of today's FOMC. Goodbye inflation. CPI misses across the board. Energy costs and used cars were the biggest drivers of the cooling. I mean, we all know it's absolute BS, but that's what's being reported. Talking of CPI, this morning we've got UK CPI numbers out, and they're showing a drop as well. So more bullish news at 7 a.m. Then we go to this evening, FOMC, big one. We're looking at a 0.5% increase, 50 basis points from the Fed. That will move the market up because it's bullish for the market. Simple as that. And the only surprise will be if he comes out with 0.75%. Gold silver ratio moving to the downside too, with silver showing strength or continuing to do so at the moment. We'll look at that in more detail in just a moment, but let's kick off and have a look at the markets for yesterday. We'll start off with the Dow. So let's kick off with the Dow. You can see we had a big move yesterday. Let's have a look at the move behind this, because the market went up and put the high in more or less straight away. So this is before the news release. This is a 1 minute Dow chart, because this is where you get to see all of the real interesting stuff as far as moves are concerned. This was, I say, the red line is the news release. This is before. The market already moved up 150 points. It just spiked up out of nowhere. So we're already got an inkling of where the market was likely to go. And as we saw in yesterday's Market Alert, there was also rumoured that it had already been pre-released to the market. So let me just fast forward through this to the point where the market gets the official news. I'm having a look there to see what it is going to be, and then you'll see as the market just absolutely, well, it doesn't just absolutely move, it gaps up hugely. You can see the gap there of 100 points as the market takes off to the upside and continues to do so. And then we get the numbers coming out. 0.1, 7.1 and 0.2, all below what they were forecast, which is said in the headline that all of the cooling was across the board. And then we see the market continue to move higher. So anybody that was short on this news got shafted, because the market moved up by 743 points there. But it was already baked in, wasn't it, really, with that news yesterday, that they were saying that it was already sort of released, as it were, beforehand. And if you come back and you can see that, where the market had the news before, 2 or 3 minutes before. So, hey-ho. Maybe this was a way of getting people to go short as well. It came off that 150 on the upside and then looked like it was moving lower. So get a lot of traders to go short. And then, of course, they just rammed it up in the opposite direction. So let's go back to the chart from yesterday. This is the completed chart. The market coming down during the trading session, which you can see there. We gapped up, moved up, and then traded to the R3. Now, most of the time, or 90% of the time, when the market reaches the S3, the market will either trade sideways or reverse, but not to this extent. Massive move to the downside yesterday in the Dow. If we have a look to the low from the release of the news, so we can see it was 1,067 points there, on the way back for the Dow. Overnight, the markets found some support at yesterday's high and close. Not a surprise there to me if it's going to come off the high. You've got your DP in the way, and then you've got this high as well. And if we get to 0.5% today, then we're going to see the market move back to the upside. And that will be all of this year's news basically out of the way. So it'll be very interesting to see how the market's going to maintain any up move following tonight's FOMC. So the way I would play this today, you can see the markets are starting to move higher. I'd get a fib retracement and just have a look at the upside targets. And all I've done here is click twice on the top of this bar. I've got nothing else to work from apart from this high up here. But I'm more interested in this 1,000-point bar to see where the market's going to have any sort of resistance on the upside. Could move to the downside beforehand, having seen that weakness yesterday, and we come down and retest the low during the morning before the market moves up later on Powell's comments. In the German DAX, we have a similar picture where the market, you can see, breached the selling to the left, took out the 89 as well. As I said in yesterday's market alert, it would just scream through this if those numbers were higher than forecast. Lower than forecast, which they were. And 14,600 is the number that you're looking for. It struggled with this yesterday. It managed to get through a bit. If you just have a look at the 30-minute chart, this is the 600 level, and you can see it managed to get 70 points through it, and then the market making its way back. But nothing like the Dow. It hasn't retraced as much. And we're sitting already at the DP and yesterday's close. The low down here, just in case we break it. But in between this, we've got yesterday's high as well, which you want to keep an eye on there, which you'll see is just down here. That's an interesting level as well, because that's where the market broke through yesterday and then just continued. Yesterday's high, obviously in the crosshairs, if the CPI is good for the UK, this morning at 7 a.m. and in the 5-minute chart for yesterday, well, you can see that we had a bit of a sell-off in the futures, and then we moved up in the that's a bit further back, there we go, sell-off in the futures, and then the cash market kicked in. Market pulled back around 10 a.m. to the DP 200 MA, oversold, and then the market traded sideways until we had the news there. Market up after the initial move. We had a bit of a sell-off in the 5-minute chart down to the R2, where the market found support and continued to the upside there. Then a bit of a pullback there. We've already got a loss of momentum, and then the market trading down. Trade so far for the week: 3.85, 4.45 for the profit factor, and 63 to 37-ish there for the win-loss ratio. So far so good this week. Like I say, this morning we got the CPI and the FOMC tonight, so it should add a few more profits to the current for this week. In the S&P, similar picture. What's interesting is overnight the market's managed to get back above the 200 MA. So just as before with the Dow, and also you can do this with the German DAX as well. There's the potential upside targets should the market continue to move up today, which wouldn't surprise me if it did, to be honest with you. Having had this shakeout yesterday, gotten rid of a lot of the long traders, and then ready to move back to the upside there. The FTSE. You can see yesterday as well, trying to hold this market up on the overnight as well. This one, interestingly enough, didn't take out the recent high. I may do this morning with the news, but it'd have to be really good news to move the FTSE that sort of distance. So would expect an up move from the FTSE if the CPI numbers at 7 a.m. are good. So yeah, what I would do here is just from here down to here, projected back, set of fibs there just to see where the resistance is. Currently at the 38% retracement there. 30-minute chart for yesterday. You see the market testing the low with the volume. Not quite oversold, but doesn't matter because it became oversold as the market traded sideways, and then we moved up 100 points there with the release of the CPI numbers from the US as well. Currencies for yesterday, GBP JPY, you can see it had a down day, trading down to the 20 bar moving average, but up on the overnight as the dollar moved lower. So did the GBP JPY, which you can see straight through the, well, not straight through, it found support at the 200 MA, then retested the low of Monday before the market found support, and then coming back with an 89% retracement at the moment and attempting to move higher. Watch that 200 MA, 50 EMA and DP should prices move back to the upside. The pound continues to strengthen, as we can see yesterday as the dollar moved lower, and in the 30-minute you can see down at the DP retested early on in the morning, the market higher, and then sailing up over 120 pips there up to the R3, where the market's likely to find weakness, which it did, and then trade sideways onto the DP close overnight, and now starting to look as if it wants to move to the upside. And in the US dollar, we can see that we're down yesterday, still below the 200 MA and the 5 now, with a confirmed downtrend inside of yesterday's action in the 5-minute chart. I'll just bring this over and rescale the chart. You can see there how it fell off a cliff during yesterday's news. But as you say, from the daily chart at the moment, the market stuck in this sort of downtrend that is well established at the moment and below the 200 MA. And finally, in the metals, silver continuing to move to the upside. A lot of volume for yesterday, which you'd expect. And again, we can expect further up moves as they reduce interest rates or don't increase rates by as bigger or larger amount as they have done recently, going down to 0.5% or 50 basis points. I can see a bit of a pullback there when we got to $24 an ounce, but moving higher on the overnight. Gold also big day yesterday, but we haven't got the same amount of volume on that, but above the 200 MA and also importantly above that $1,800 psychological level. Nice move there yesterday, nice formation there of buying all the way through and then sideways overnight, not the bigger pullback as it was in the silver chart, which you can see there. Okay, that will do it for this one. CPI numbers at 7. FOMC this evening, last two major economic news announcements for this year. So let's see what the traders make of it later this morning and also this evening, 12 hours apart, oddly enough. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.